So only 24 hours ago, that Bombardier stock was flying high on the best performers list on the TSX. But today, the maker of business jets saw its biggest drop since late November. It's tariff news in both cases, which drove the stock higher yesterday and lower today. We're joined now by Bloomberg's Stephanie Hughes for more. Stephanie, it's not difficult to know what the chief influence on shares of Bombardier is these days. It's comments from you-know-who in the United States.
Yeah, it quite seems like that, Paul, and it's easy come, easy go for Bombardier there. So yeah, like you mentioned, the share is down as much as 8% today. That was its biggest intraday drop since late November, and it's firmly at the bottom of the TSX worst performers list for most of the trading day today. And that is in stark contrast to the conversation you and I were having 24 hours ago when you mentioned it was on the top of the best performer list because of these tariff-related reports. Basically, the private jet manufacturer was flying high based on these reports that tariffs might not be imposed on day one. It gave a little bit of reprieve and perhaps a glimmer of hope that it might be spared for now. So fast forward to last night and today, it's becoming increasingly clear that Trump is going to move ahead with these tariffs and even set out a timeline of February 1st. So the reason why Bombardier is particularly vulnerable to these tariff headlines that we see quite a few of these days is because it really has this complex supply chain with facilities in Canada and Mexico. So that really leaves it exposed to the whims of U.S. President Donald Trump's commentary about what gets tariffed. So obviously we don't have the exact details on what sectors are involved, but given its cross-border vulnerabilities there, Bombardier is having a rough ride there today, Paul.
And MEG Energy trading on the same sentiment. It was a big gainer yesterday. It's down substantially today.
Yeah, so it's another tariff-related TSX underperformer, falling as much as 5.3% today, and it erased a lot of its gains that it enjoyed yesterday. And there's still a lot of unknowns of what tariffs could look like, but it is possible that we could get tariffs even on the energy sector, which is what's straining a handful of oil and gas names on the TSX today, including MEG Energy. What was interesting is that analysts at Scotiabank argue that if tariffs ultimately do end up including the energy sector, that will actually be somewhat inflationary on both sides of the border and will therefore be temporary if Trump wants to make good on his promise to lower the cost of living for Americans. So they also recently added that the underperformance of Canadian oil stocks, mostly because of these tariff jitters, could actually provide a good buying opportunity. So to them, they pointed out to names like MEG Energy, like we're talking about, Athabasca Oil, Cenovus, and Canadian Natural Resources there. So few investable ideas coming from Scotia there, Paul.
Stephanie, thank you, as always, for keeping us up to date on what's moving in Toronto.